It's all covered in today's China Truths.
Banking crisis, Postal Savings Bank, depositors say, "We can't get our money." Recently, a fixed deposit at a branch of Postal Savings Bank of China in Qingzhen City, Guizhou Province, exploded, causing widespread shock and fury. The bank had boldly promised depositors that by investing just 10,000 yuan annually, they would walk away with 58,000 yuan after 5 years. But now, even the principal is gone. A lawyer warned, if high-risk wealth management can't guarantee principal or interest, depositors have every right to demand their money back. Screenshots and testimonies have flooded Chinese social media, revealing that on June 10th, fixed deposits at the Weicheng branch of China Postal Savings Bank in Qingzhen City imploded. A blogger revealed that locals were lured by promises: invest 10,000 yuan yearly, receive 58,000 after 5 years. But now that the term is up, nothing. Not a cent returned. Dafeng News confirmed the story. A devastated depositor from Guiyang posted a video on June 10th revealing he had put his trust and money into the Postal Savings Bank 5 years ago. Now, the bank claims it's difficult to cash out. He recounted, "They promised 58,000 yuan after 5 years. Today they told me I'd lose 7,800 yuan in the morning. By afternoon, it was the whole principal." In the live stream, police were seen questioning bank staff as the scene unfolded. When questioned, a staff member of the Qingzhen branch offered evasive answers. "We're the same level as Weicheng. There's no hierarchy between us." When asked whether it was a deposit or wealth management product, they claimed ignorance. "I asked around. We don't offer this service." The Guiyang branch replied vaguely. Media interviews go through layers of approval. Prominent lawyer Tan Mintao pointed out that the promised annualized yield of 6.96% far exceeds normal deposit rates, suggesting it was likely a high-risk product. "This may have been a disguised wealth management or insurance scheme," he said. Or worse, bank employees violated regulations by marketing it as a guaranteed deposit. According to a March report by China's Financial Times, this type of deposit-turned-insurance scam has become alarmingly common. Banks and insurance firms have colluded to deceive the public in schemes that look legitimate, but are anything but. Media investigations have exposed this shocking trend of institutions changing the sky before the eyes, stealing deposits by disguise. In Wuhan, Hubei province, bank branches secretly brought in insurance salespeople. These individuals wore fake bank uniforms, carried look-alike badges, and posed as bank staff. They sold insurance under the false promise of high-interest fixed deposits. Terms like no returns in 5 years and penalties for early withdrawal were never disclosed.
The report further revealed a deeper betrayal. Banks provided sensitive customer data, names, phone numbers, deposit amounts, to insurance firms. Some even gave direct access to internal banking systems. Depositors were left completely exposed. The Postal Savings Bank scandal in Guiyang has sparked nationwide outrage online. Comment sections exploded with claims from users who say they too were duped. Panic is spreading. A netizen from Hubei vented, "I fell for it. Postal Savings Bank told me I could get everything back after 5 years. Now, not only is there no interest, they want to cut 10,000 yuan from my principal. These banks are outright scammers." Another from Shandong shared, "I deposited 8,000 yuan yearly for 5 years in Taikang via Postal Savings Bank. 10 years later, I only got 50,000 yuan back. It was forced insurance. The real interest is a third of what they promised. Even worse, some banks just erase your principal. I've been scammed by Bank of China, ICBC, and Postal Savings Bank." Anhui netizens. So many people in Anhui fell into the same trap. They deposited 10,000 yuan a year, expecting 1,200 yuan in annual interest. Some kept paying for 3 or 5 years, only to discover they couldn't withdraw a single cent midway. The money is locked tight, and they can only take it out every 5 years. The bank staff made it all sound perfectly logical. until it wasn't. Netizens from Guangdong, Chongqing, Hebei, and Sichuan. It's game over. I bought China Post insurance too, 10,000 yuan a year for 5 years. It's almost due, and now they're saying I can't withdraw a thing. Same here. I signed a contract. Now I'm trembling just reading the news. Mine's with China Construction Bank, 20,000 yuan a year. I'm starting to panic. I've got 150,000 yuan stuck in Agricultural Bank of China, 5-year term. This is only year 2. What now? I'm seriously freaking out. Mainland netizens are furious and sarcastic. So this is what a happy life looks like, brought to you by a central enterprise, a state-owned bank. It's a full-blown scam. Why is getting your own money out of the bank harder than robbing it? Because banks have become negative banks. We're not scared of con artists anymore. We're scared of the ones who know the law inside and out and still use it against us. When rules are just tools for the powerful, it's always the common people who get crushed.
Many banks in China set limits on fund transfers. In recent years, China's economy has been on a downward trend, and the banking industry has been severely impacted by the real estate crisis. Recently, many bank branches in China have faced issues with withdrawals, causing dissatisfaction among account holders. Many users believe that the reduction in bank card transfer limits is a deliberate attempt by banks to restrict funds from flowing out. According to a report by Beak Finance from the Beijing News, several bank card users have reported that their cards were limited without their knowledge. Many of these users tried to raise their transfer limits by visiting bank branches, but some simply gave up using the card altogether. Since the second half of this year, many banks have announced adjustments to the transfer limits for non-counter transactions on personal current accounts. These users mention banks like Bank of China, China Construction Bank, Agricultural Bank of China, and Jiangxi Bank among the institutions having done so. Regarding the reduction in bank card transfer limits, many users believe this is an intentional attempt by the banks to prevent funds from leaving their system. However, bank personnel have explained that this measure is mainly aimed at preventing telegraphic transfer fraud. Nevertheless, bank card users have expressed frustration, saying they were unaware of the limit changes. The bank did not send an SMS notification, has been a common complaint. One user, Liyun, a pseudonym used for her security and safety, said she was shocked when her bank account for receiving salaries suddenly had a transfer limit imposed. In July of this year, she planned to withdraw a reimbursement amount of about several thousand yuan from Bank of China, but she was unable to either transfer the money or withdraw it from an ATM, as it exceeded the daily transfer limit. What surprised Liyun even more was that another account she used to pay her mortgage, a Jiangxi Bank Class 1 card, was also limited in July and August. She had used both cards for many years for small purchases, and neither card had ever had withdrawal or transfer limits set. Both banks unilaterally adjusted the mobile transfer limits on her cards to a daily cap of 2,000 yuan or $276 without notifying her. Liyun explained, Bank of China staff originally told me I could go to any branch with my ID card to adjust the limit, but when I arrived at a nearby branch, I was told I needed to go to the branch where the account was opened. She faced further complications as the account opening branch was closed that day, and it took a month for her to successfully raise the limit. According to a report by Shanghai Broadcasting Television Station on November 14, some bank card users have said their transfer limits were reduced without their knowledge, with some even unable to transfer as little as 1,000 yuan or about $138. These customers believe that the banks are limiting non-counter transactions to prevent money from flowing out. In January of this year, Jiupai News reported that a woman in Pingdingshan, Hunan Province, had difficulty withdrawing money from a bank when her sister tried to transfer 5,000 yuan to her as a New Year gift. The staff initially suggested downloading an anti-fraud app, which seemed responsible, but later began asking inappropriate questions about her sister's workplace, previous jobs, and even demanded proof that they were sisters. Eventually, only after about 2 hours and police intervention, she was able to withdraw the money. In a similar incident, according to Postal News, a woman in Jiangxi province posted on a social platform, saying that when she went to the bank to deposit 100,000 yuan into a time deposit, the staff asked where the money had come from. She was surprised, saying, "Why does it matter where the money came from? Just process it as I said." She felt as though they were treating her as if the money had been stolen. The staff explained that it was the bank's policy. In response to these issues, some netizens commented, "The banking system really needs to be properly reformed. The service attitude is extremely inconsistent. When you deposit money, you're treated like a VIP, but when you withdraw, you're treated like a beggar." The leakage of personal information can't be said to have nothing to do with them, because the information we leave with the bank is quite accurate, and the moral standards of employees should really be better assessed. Please share your thoughts in the comments section below. We will keep reporting on the COVID surge in China, so don't forget to subscribe to our channel and turn on the notification bell to get the latest videos. And thank you for tuning in.